Hello, traders. I hope all of you are doing well. Welcome back to Your Nifty Guy. In the stock market, patience is a currency. Spend it wisely and it will buy you clarity. As we look ahead to tomorrow's Nifty setup, that patience might just be the edge we need. Every level and move needs to be read with calm observation rather than impulse. In this video, I'll share my complete plan for tomorrow, key levels, possible scenarios, and how I am preparing for the session. If you find these daily setups useful, don't forget to like the video, subscribe to the channel, and share it with your trading circle. And of course, drop your thoughts below. I would love to know your view on tomorrow's move. And before we start the analysis on the chart, tomorrow is the weekly expiry of Nifty. So anybody who is into trading Nifty and he's trading Nifty using options buying, please make sure to shift your trading to the next week's expiry. I do it personally on expiry as well as expiry minus 1 day, which again the trades that I took today were in the 14th of October expiry rather than the 7th of October expiry. The reason being simple, you might be paying a slightly higher premium for your entries, but then you will be doing yourself and your capital a much needed favor by simply shifting your expiry to the next week's expiry once you are close to the expiry, right? So that being said, we'll start with today's video. The video will be as usual divided into two parts. First, we'll be discussing about what we had planned for today, and second, we'll be discussing the trade plan for tomorrow. So our plan was very simple. We had a bias on the long side, and we planned to go long above Friday's high with a pullback. Now markets opened with a slight gap up, gave us the pullback that was much needed. This high was the entry, and as soon as markets broke up above this particular high, I entered around here itself. Now we already got the pullback, so we did not need to wait for a pullback to enter again after the breakout, because this was the breakout level, which was the Friday's high. And then this was we opened above it, we got the pullback. This was the entry. However, if anybody would have waited for the pullback, this would have been the pull back again, and again this would have been the entry, but then this is not needed because this already is the pullback around here. So I entered around here. The stop loss was right below this particular candle, this particular swing, and it was a big stop loss nonetheless, but then again the setup was too good to not be traded. And once we got this particular swing, I shifted the stop loss from here till around this swing. Now the markets today were this particular trade was an extremely smooth trade, not much introspection or any corrections or modifications or trailing methods needed again there out there. Now the markets gave again this particular swing. After this particular swing, I moved the stop loss from around here till around here. This was again, as we approached the resistance level, this is what I had mentioned, that this is the area that we had marked is the resistance level on the daily time frame, the fib retracement levels, and we should be careful around these levels. And as you can see, we got the first reaction from the markets around these levels itself. But then again, as per the trailing setup methods that I used, I exited my trade around the 11:45 candle. This was the candle which fulfilled all the criteria that I personally follow, the high being lower than the previous high, the low being lower than previous low, as well as we got a closing below previous low. So this was the exit. In this trade, I traded in the following week's expiry, which is 14th of October, and I captured around 45 points. Now, the thing to be noted is markets moved so much. I captured this much, right? If we are to compare markets, if we come from the bottom till around whatever is the day's high, it moved 212.85, 200 odd points. I captured only around 45 points, right? In this particular move. And if even if I look at the exact strike price that I traded in, I'm not even capturing the bottom, but from my entry, I captured 45 points and I exited. And post that again, market gave a good move on the upside. And the net movement in that particular strike price in the following week's expiry in which I traded, from my entry, it moved around 125 odd points. But I captured 45 points out of that, right? So that is what I want to emphasize to all of you. You never know what the next move is going to be. But we were prepared that this might be a good resistance level around here, and we should be careful around here. That was the reason why, again, uh, after I exited again around here, the price action, the market structure was not very, very clear. The markets did go sideways. So this can be considered as a good volatility contraction, and this could have been a good trade. And again, we could have entered into long trades around here had this not been a resistance area. That is why I did not re-enter into any of the trade. But then the point that I want to put across here is the markets will move a lot, right? The markets will move a lot, but need not necessary that you will be able to capture it all, or you will be a good trader if you capture the entire move only. So even if you are in the right direction and you capture a part of the move which is in the right direction and you end up making money, you are in the green, that is also still very, very good, right? There should be no FOMO that, okay, markets move, my strike price after my entry, it moved 125 points. I exited at 45 points, right? It moved more than what I had captured after my exit. But then that is something, this is the psychological part. This is what, if you can control, you can be a good trader in the long, long term, right? So this is what actually matters. The strategy, the planning, the execution, all is secondary. Now, I have had no FOMO. Now, again, I took a second trade in the day. So as we had planned that this is a resistance area, and any negative price action that we see around here, we can look for a shorting trade as well. Now, this was a double top which formed around here with a good RSI negative divergence. So if you see very clearly, markets formed a new high around here, RSI formed a lower high around here. At the same time, this became my entry criteria. I entered and exited in the very same candle. I entered at the break of this particular low. I exited at the close of this particular candle. I took a stop loss of around 7 odd points, right? Exactly 7 odd points is what I took a stop loss of in this particular trade. So one trade which in which we captured around 45 points. Second trade I lost around 7 points, and the quantities around here were lower. Of course, since I told you the direction of our bias, if in which we get a trade, we go in with full quantities. In case if we are getting a trade which is opposite to the bias, we will of course take it, because you never know, markets could have very well reversed from here. Again, after breaking down from here, we could have gone further down. So you never know what the market is going to do. And if you are getting those particular signs from the market, you got to take that trade. And if the market goes in your favor or not, that is something which the market will decide. But then your only part is to look at the signs and then execute. So this is what, again, with RSI negative divergence at a resistance area, we were getting a good double top. That is where I entered. Now, there was a very low conviction in this particular trade, because if you look around here, this is a very clear double top. But my suggestion would be, if anybody's there, go and check out 25,100. That is a strike price I entered. 25,100, 14th October expiry put. The price action was not clear, right? So this 110, 120 swing which is made, that was never even broken. So this is a double top around here. So we got a double bottom. We should get a double bottom on a put price around here if you're looking at a shorting trade. But then again, since around here this low was broken down, but then in the put, we were far away from the high, which was the swing high, which was created around here, right? So that is the reason why I did not the trade was not very high convincing, but then again, nonetheless, uh, if the market shows us the signs, we will be taking a trade. Of course, we know the stop losses. The stop loss initially was around this high, but then because of the hammer that we got, I exited the trade, right? So I hope the two trades that we took today is very, very clear. And again, tomorrow is the weekly expiry. On a daily time frame, now we'll get back to tomorrow's planning just quickly. We don't need this. We don't need this. We'll still keep this particular resistance level, the daily favorite retracement levels in on our charts. So we got 8 to 9 days of straight red candles, and we have got a very good bounce from here, right? Now there are two ways to again look at it. I assume we are right now not I assume, but we are right now at a resistance level. Now, after this particular move, the markets are not going to go up directly like this, right? It has to come and give us a some retracements again, and then if we continue the journey higher up, that will be much more tradable and feasible, right? So this can be one particular scenario in which uh, we got this particular move on the downside. Now this is an upswing. We get a further retracement. We get a double bottom basically on the daily time frame, right? Another scenario can be we take a resistance from here, and then again we might be going down. So this looks like a head and shoulder pattern. Basically, patterns or the structures or the name of those patterns do not matter. What we really need to see is right now we are at a very, very crucial level. So this might be a make or break level for Nifty. All we need to see is that if we are breaking up above this resistance, getting a small pullback and then continuing the journey, or we are taking a resistance and then we are going down from here. So that is something, this is a, like I said, make or break level for Nifty. So we'll be observing the price action very, very carefully around these levels, and that is something in which we'll be using our plan. So for tomorrow, again, the plan of action will be very simple, right? The first plan will be the elusive trade that we have. If we open flattish, slight gap down, very flattish opening basically, and we get a closing above today's high, and then the low of that candle that's taken out, that is something which wherein we can plan a trade on the short side. Now this will be a very quick scalping trade, nothing much to hold on to, and this is basically based on the trap trading system. So people who would have missed the entire rally of today, they will be having FOMO as usual. And at the break of today's high, there will be people who do not wait for pullbacks and they will be entering directly. And if the low of this particular candle gets taken out, all the stop losses will be triggered and which can give a good move on the downside. So that is some a momentum that we wish to capture in case if that happens. So there's a lot of conditions which needs to be fulfilled for this particular trade to happen. So we'll keep an eye for any trade on the long side. Again, we will be waiting for a breakout above today's high with a pullback. We'll be going long. Now I'll be using the 75 minutes time frame to get my fib levels. So this is the last bottom from which one-sided buying has come in. And yeah, this is the 0.5 to 0.618 support zone. So even if we open, so in case if we're taking a short trade, we'll be careful around these levels. And in case if we open the gap down around these levels, if we find some buying, we'll be taking a long entry, and below this level will is the only trade then when we'll be planning a trade on the short side. So if you have been following me regularly, you've been seeing we are not doing anything new, right? We have not been experimenting a lot, so we are using the same setups again and again and again every single day, right? We are using fib levels to find out retracement levels where markets can be turned, when we can find out turning points for the market, and simply we are trading breakouts and breakdowns using pullbacks. So trading as such is this is the real trading, which is quite boring to speak of. But then again, I believe there's nothing much more interesting than trying to find out the hidden story that the candles are trying to tell you. So be a friend to the candles, try to talk to the candles and see what the candles are trying to speak, and then trade based on that. So, yeah, that's the simple plan for tomorrow. Again, tomorrow is the expiry post 2 p.m. If we get the expiry based setup based on the change in open interest, if we see a heavy call or put writing on either side, and then we see those people exiting and simultaneously prices breaking out or breaking down around those strike prices, that is something which we can trade the expiry special trade, and that is the only trade in case if things happen as per the plan. That is the only trade which I'll be trading in tomorrow's expiry, and that will be a hero zero trade, right? So again, the risk will be very, very low, and the rewards can be very good. So yeah, I hope that's it. So remember, in trading, it's not about how often you trade, but how patiently you wait for the right setup. Stay disciplined, stay patient, and the clarity will follow. If you enjoyed the video, don't forget to like, subscribe, and share it. And I'll see you in tomorrow's video. And yeah, cheers and thanks for tuning in.